Hey, folks, welcome to InTheMoneyStocks.com and how I profited on 5 swing trades in just 3 days. This video is, of course, sponsored by Realtic, and first things first, we're going to get right into the charts and discuss how in just 3 days I banged out with my members at InTheMoneyStocks.com 5 winning swing trades. All right, and again, that's in 3 days. First things first, you have to understand the market itself. This is the SPY daily chart, which mirrors the S&P 500, and this is where it all begins. You can't go to an individual stock without knowing what the market is going to do. Essentially, the theory behind this is you must have the wind at your sails when you're taking a trade. For instance, if you're going short, you need to know that the market is about to fall. That will help your short make you money. If you're going to go long, you must have the market ready to bounce or bouncing so you can have the wind behind you or the market pushing your long play in the right direction. All right, so looking at the charts, folks, this is where it all began, right here. This was where we called the cycle top of the market. We had major indicators telling us the market was going to pull back and pull back sharply. In addition, as we pulled back off the cycle and then bounced, it formed a head and shoulders pattern. Classic head and shoulder pattern right there. See that? This is your neckline. When the neckline breaks, the target we calculated out to be was 129 to 130 on the SPY. All right, so again, please note the shoulder, the head, and the shoulder, and this right up here was the call for the market cycle top, which turned out perfectly. So number one, that was an amazing call right there. But secondly, when it comes to trading, when we were at this market cycle top, we started to take some beautiful shorting opportunities. Number one was the SDS, which again, if you go long the SDS, you are ultimately short the S&P 500 by 2 times. So again, down in this range here, this is where you accumulate, this is where we as members accumulated the SDS. As you can see, our first play, which we closed out last Friday, just 3 trading days ago, ran all the way up, and Friday, at the highs right here, because we knew the market was going to bounce on Monday, we took our profits. Look at that run, folks. A beautiful run. The next play, as we knew the down cycle was going to play out, was SPG, which we closed out on Friday at our second target. We shorted it at 157.65, which was right here. And we had our second target, which got hit on Friday, right at the lows here at a price of 144.35. That is a monstrous gain, folks. Now, what did we see here? Well, the master level triggered right up here, and this is based on proprietary methodology calculations. That's something we teach you here at InTheMoneyStocks.com. Based on that, based on the extended move, based on the downward move and the breakdown of the head and shoulders pattern. Remember this, folks. This breakdown right here told us once we crossed this line on the SPY, which mirrors the S&P 500, that this market was going to dump to completion of the head and shoulders pattern. All right? Once we saw that break and we saw the master pivot on SPG hit at the same time, we shorted SPG. This is Simon Properties Group. The stock fell and started to make a beautiful in spirit of bearish consolidation pattern. If you recognize the pattern, you know it's going to go lower. Sure enough, the stock collapsed, went right to our second target. We took the money off on Friday, and we were out of the play. Look at how perfect that exit was. Look at how perfect the entry. I mean, this is maximizing your profits. Getting in at the highs, getting out and covering your shorts at the lows. That's what you have to do as a trader. All right, when you're a trader and you're shorting here or here or here, you're going to get in the problem of not having a great entry, so you're going to have to fight the trade. And fighting is never a good thing in trading. It usually means you're losing. All right, bottom line is number 2 profit taken on Friday. Last week, we could see clearly, and this is the next big one, folks, that gold was getting ready to bounce sizably. While everyone else, including the media, was trashing gold, we knew it was going to bounce. The way I played gold was to look at the stock Gold Corp GG and notice that you were into major support levels on the chart. So again, not only if we flip over to the GLD, did we see that gold was into a perfect double bottom here, which should be a great bounce opportunity. So this is the gold chart right here, the GLD, and you can see that perfect double bottom. In addition, if you go to Gold Corp, you saw that there was also a support level in the making between this level right here, draw it right across, right there, and this pivot low right there. Two major support levels, plus the gold chart was showing a bounce. This told us buy GG. We entered this play at $32.95. The stock, within a couple days, bounced $2.80 right into the 20 moving average, which was first target right here. We closed that out first half on Friday, folks. On Friday, it hit our target beautifully. All right, and that's what you have to do, folks. It's all about swing trading. So listen, just on Friday alone, 3 profitable swing trades closed out in a short-term move. Next up, what do we have? The next are coinciding with the bounce in the market. If we go back to the SPY, this is what becomes very important as well. If you go back to the SPY, you had to calculate your target on the head and shoulders, which is something we teach you here at themoneystocks.com. When you calculate your target, you knew the SPY was going to drop right here to the 128 to the 129 to 130 level on the SPY. That was the target of the head and shoulders. And once it hit that level, it had completed. Based on that, you must be ready for a bounce play. In addition, the bears were too bearish. Contrarian indicators were pointing to a bounce. Methodology was pointing to a bounce. In addition, every average person was waiting for a bounce at the 200. We know better. When every average person, just like with the Facebook IPO, when every average person is getting in on the Facebook IPO at $38 a share or $40 a share, you know it's going to go lower because the average person does not make money. You have to be above average. You have to learn how to do this right. Sure enough, the market, beautifully based off time counts and other factors, as I just pointed out, has bounced off of our call. We positioned ourselves long on plays like Las Vegas Sands. I had a master level on Las Vegas Sands. And again, I want to show you this, guys, because this is an awesome thing. Take your low from 2009, connect it through the lows of the chart throughout multiple years, and look at what price you get. Is that a sweet level or what? And again, as I said before, we had the market ready to bounce. Notice how my short calls were coinciding with the market dipping and finding master levels on those stocks. And my long calls here, like Las Vegas Sands, which we went long at 45.95, which was right here, is coinciding with the market ready to bounce and did bounce. The wind at your sails is what you have to do, folks. It's the only way to do it, in my opinion. You need to keep that wind behind you. You find the master levels, you find the charts that are into support or resistance, and you get the market on your side, and you will guarantee yourself a profit 9 out of every 10 times. All right? It's an amazing technique to use here. We teach you this at InTheMoneyStocks.com, and there's a free trial you can utilize as well. Free trial to the Research Center for swing traders. If you wanted all these swing trades, they were all in the Research Center. Okay? Sure enough, LVS rocketed up today. So we entered this on Monday, yesterday, and we're already out at our first target at $48.45 for a $2.50 profit. I mean, that is just awesome. 1 day hold, $2.50, just like that. It's like printing money. It's like we're the Federal Reserve, like we're Ben Bernanke printing money. That's how we do it here at InTheMoneyStocks.com. All right. The next trade, let's take a look at the next one, JP Morgan Chase. Now, JP Morgan Chase has been hammered of late. Absolutely demolished. But you know what? When everyone is bearish and the chart is coming into support and you know the market's going to bounce, what do? We find the level of support and we buy it. Where did we buy it? Well, you knew there was support right here at gap fill, right there. And you knew that there was more support right here at this gap fill. So there are two major levels of support right here. Right in this range was the buy opportunity that we took. All right? And again, gap fill, it erased all of the gains from the year. You know there's going to be some support there. You have another gap fill below, which it tagged yesterday. We entered this on Friday. We are already in the money, $1 or so on this trade. All right, now there were other trades I gave out in the Research Center videos as swing trades as well, which I didn't even include when I said 5 winners in 3 days. I'm going to go over those right now because I think it's important. If you're in the Research Center, folks, you get the hot charts and alerts, which is where I posted all these trades that I just went over. You also get the technical analysis video, which is a nightly video where I go over more swing trades and more opportunities in the market analysis, and I teach in it as well. And those are all in the Research Center. And there's a 7-day free trial for it. Let's take a look. Number 1, CLNE. CLNE was into major support. I gave out the long at $13. It hit $14.43 today. From Friday to Tuesday, 3 trading days. $1.50 gain, well over 10% return on CLNE. All right, another one, USO. USO, you can see my line right there. Went right into the level. Yesterday we got a great pop. You're pulling back a little bit today. Still in the money on that one beautifully as well. There were many others given out in the video, including, and this is the last one I'll go over, Apple. Apple I gave out at this level, and I called this level out literally a week ago. And I said, when Apple gets between 520 and 525, that's your long opportunity. Sure enough, Friday it dips into that range. It literally bounces $31 the next day. All right, bottom line is, folks, the proof is in the pudding. The profits are here at inthemoneystocks.com. I've just gone over literally 5 trades on the hot charts and alerts and 3 more winners in the Research Center technical analysis video, which is all inclusive in the Research Center as well. This is 8 total trades, winners, all winners, based on both sides of the market. It's not like we're bulls or bears. We do anything based on the charts as long as we see the right things in the charts. That's 8 trades, 8 winning trades in just 3 trading days. It's great stuff, guys. The profits are rolling in. The members are just printing money left and right. We encourage you to come take our 7-day free trial here at InTheMoneyStocks.com. Learn the secrets that we have developed. This is proprietary analysis. You're not getting this anywhere else. Hedge funds don't have it. Institutions don't have it. Only members here of the elite, which you can become. Join us at InTheMoneyStocks.com, folks. Profit with the pros.